One of Cathie Wood's favorite stocks is tanking in the after hours. Should you buy the dip in Roku stock? Talk about that and more on today's show. What is going on, investors? Hopefully you guys are having a great day out there. And I tell you what, you're probably having a way better day if you didn't just buy Roku stock, which is tanking in the after hours by about 8.5%, nearly 9%. And from a technical perspective, has pulled this stock into an area that we have not seen but just over a handful of days over the last year. It is at a critical technical level, and we'll talk about what this means for the share price going forward with Roku. Now, the stock is reacting negatively, primarily due to the Q3 numbers that came out, but also the Q4 guidance as well. We're going to jump into that now. Revenue came in over at Roku at about $680 million. Now, that's solid 50% year-over-year growth, but it did miss the street expectations by about $1 million. Now, what I think the stock is reacting more towards is the fact that total revenues for the upcoming quarter in Q4, all important Q4 for a company like this as well, is coming between 885 and 900 million. The street was much closer to $940 million. So Roku missing expectations on that revenue side quite a bit in the upcoming quarter. Now, when we dive into Roku's numbers, they still give us active accounts up here, and we see that year over year, those are up 23%, rather robust growth year over year. But we are seeing that active user growth starting to flatten out, much like we've seen with Netflix. I'm sure we'll see with Disney and other streaming products that saw a vast number of users adopt the platform in 2020 as they were sitting at home and just streaming lots of content. Now, what Roku has done a tremendous job of is actually profiting off of these users. These numbers are fantastic. Take a look at this average revenue per user coming at $40. That is up 49% year over year, and even up about, nearly $4 over just the previous quarter. It's a company that's doing a really nice job of profiting and generating large amounts of money off of each of their users. That is very impressive. Now, their platform revenue, which is basically the money that is made through subscriptions and ads and everything that runs through the Roku platform, that was up 82% year over year to $582 million. Now, they do have this player revenue. These are the physical Roku devices that you buy somebody, or you might even buy yourself. That came in very light, okay? In fact, down 26% year over year. Roku cited supply chain and other disruptions in that. Not only that, but the gross profit of that platform revenue actually went negative. Now, it was negative last quarter, negative 6.7%. It was even further than that. They actually lost money off of this player revenue to the tune of a negative 14.6% margins. Now, I actually don't mind that. I tell you what, in the past, the margins of this player revenue have been as high as 20%, but we see here's Q4 of last year where the vast majority of Rokus are purchased. You see they did $178 million worth of player revenue. Well, the margins were basically nothing, okay, 4.6%. I don't mind that business model from Roku, basically selling the player at a loss or very, very small margin, and then eventually making that up on the back end because, look, your average revenue per user is $40 in the quarter just for 3 months. So the more people we can get with these players and start using the Roku platform, well, the more money we're going to make. And I don't mind that we lose money up front on that player if somebody like that sticks around for 6, 7, 9, maybe even their whole life. It would be awesome. And so I don't mind that. And I don't think investors are really too concerned about this, but it does give us pause about the Q4 where a lot of Rokus are likely gifted during that quarter. If Roku is having trouble delivering these devices, well, it could mean that less people sign up and get access to Roku than what we would want. Now, moving over to the broader financials here, we've got our total net revenue. Again, this comes from the platform and the player revenue. Again, we're losing money on this player revenue. We made $97 million, but we spent this $112. But again, the juicy, absolutely juicy part of this business is on the platform side. We only spent $203 million to make this 582, and I absolutely love this. This is why, while I don't own any shares of Roku, I don't necessarily think I'll add any shares to my portfolio of Roku, but I actually really like where this company is going because you see here, you've got the $680 million worth of net revenue. It only cost us $316, and again, they had a lot of problems delivering and logistics and supply chains with these players. So we get a total gross profit down here of $363 million off this $680 million worth of revenue in the quarter. That gives us a ton of room for research and development, which came in at $120 million in the quarter versus 88 in the previous period. It gives us a lot of room for sales and marketing. That came in at 109. In the previous period, it was at 70. And then for general administrative expenses went from 43 up to 65. That brings our total operating expenses coming in at $295 million. So we take this $363 million worth of gross profit, we minus off this $295 million, and we get our income from operations over at Roku sitting at $68 million in the quarter. Now I understand the stock has a $42 billion, no, not $42 million, $42 billion valuation. That is incredibly rich when you factor in over the last quarter, they did $68 million worth of income from operations. For the last 9 months, they printed about $213 million, and you give them credit for maybe a great quarter next quarter, and they're sitting at $300 million. Well, that's still, I mean, just an absolutely astronomical, we're talking about astronomical valuation, but this company appears like its ability to not only grow this top line user number, which I think we're all expecting to starting to flatten out a little bit, but this average revenue per user, they're still able to churn out more money out of these users. And that should be exciting because I think we will see a slowdown in this active accounts. We'll probably see a flattening in terms of the streaming hours, but if we can keep expanding the ARPU, that is what Roku needs to do. And I think that in both sense is exciting for some investors, but it's also making some investors nervous. That's why this stock is basically sitting on 52-week lows in terms of its price, because investors are starting to get a little bit nervous there, particularly about the valuation versus the amount of profit that this company prints out. But all things being considered, I like what I see here. I think unfortunately, the stock is overvalued from a market cap perspective. I mean, $42 billion, and you're looking at, a couple $100 million worth of a net income or adjusted EBITDA, however you want to look at it. It's still not that great, but I do like these numbers, and Roku is very, very well managed in terms of that sense. Look, the company has no control really over their market cap. They have complete control over these numbers, and quite frankly, they look pretty darn good. Now, when we take a look at the balance sheet over at Roku, we got $2.1 billion worth of cash. That is more than where we were sitting at the beginning of the year. I'm curious to where this cash came from, because I don't think they printed enough to their bottom line to bolt on, it looks like, over $1 billion to this cash side. So we'll see where that came from. You see here our total assets went from 2.2 up to $3.9 billion. Just on the current asset side, they went to nearly $3 billion versus 1.7. So they bolted on a lot of cash there. Now, so we'll come down here to long-term debt. We see that long-term debt actually went from 89 down to 82. And we see that the current portion of debt actually went up a little bit. So I don't think they added this cash to their balance sheet through traditional debt like bank debt. We'll see how they added it in a second. Now we come to our statement of cash flows. Now cash flow is a little funky, I think. It paints just this glorious picture over here. And we don't typically, when we analyze Netflix and other like a pure streaming, really Netflix is the only competitor I think you can compare Roku to. We don't normally look at cash flows for a couple of different reasons, but you pull down this fabulous net income number of 218. They were negative a year ago. So I don't want to float by that and say, hey, this is nothing. From a net income perspective in the last year to go from a negative 84 up to this 218, absolutely fantastic. Now you do get to add back in massive stock-based compensation. Take a look at this, 133 million. Last year sitting at 95. And then they get this amortization of content and right to use assets. This is basically $70 million. It's basically content that they've paid for, but they're trying to, like, maybe they get like a 3-year contract for a TV series or something to be the exclusive streamer. Well, they amortize that cost over a long period of time. In terms of cash flows, you get to add that back in. And so you get here this net cash provided by operating activities, massive $253 million over the last 9 months. But it's very close to this net income number, okay? And that's why I tend, when I look at a company like this, I tend to just focus on income from operations, or if you want to flow out taxes and interest, well, you come down all the way to net income because it's very close to where you were at from a cash flow perspective. Now, they didn't do a lot on the investing side, but here's our proceeds from equity issued under the at-the-market offering. Essentially, this is an ATM M, and it's kind of like what it sounds like. Roku has an at-the-market offering. Basically, they have somebody on the other side that is taking Roku shares. Basically, what Roku does is they sent 989 million worth of shares to some, it could be even Cathie Wood, but it's some kind of investment bank or somebody on the other end. And then what does Roku get? They get cash. They got about $989 million. And so that's where the vast majority of the cash came from the business. Some of it actually came from the business. Some of it leaked out in terms of our financing activities. But then most of it came through this debt offering, or not, I don't want to say debt offering. It's basically dilution. They basically sold shares of Roku to generate money. And that's where they've got about $2 billion worth of cash sitting on the balance sheet, where they had about $1 billion at the beginning of the year. Now, this stock is bouncing around. Currently, it's trading it down about 8%. I think as investors are going to start digesting these numbers, they're really not that bad, but I think investors are wondering, like, what's next for Roku? We don't think that they're going to be able to drastically increase this active users account. This is going to start flattening out from a year-over-year perspective. This is probably the last quarter where you can really print a gigantic year-over-year growth on that active account. And certainly as you go into Q1 and Q2 of next year, you're probably going to lower this down to single-digit growth. So what's going to happen to this ARPU? Are they going to be able to keep expanding this like they can quarter over quarter and year over year at Roku? I think that is the question running through investors' heads. On top of that, they're having trouble delivering these players because of supply chain and logistics, and that certainly could impact ARPU and active accounts and streaming hours in the coming quarters, and that could have investors nervous as well. So from the shorter term, I think some investors are looking at this. On top of that, we talked about how this company has a $42 billion valuation. They've got all these headwinds that they're running into, and it's like, how is this company going to grow into $42 billion valuation without drastically raising the price or flooding the platform with ads, or maybe jacking up the prices on their players, which I don't think would be an effective strategy? So I think those questions are running through investors' heads, and that is why this stock is basically on a 52-week low. I will circle right inside these tiny little boxes right here. In fact, I'll zoom this in a little bit because we don't really need to see the tail end of this chart. Is now this stock is sitting between $280 and $300 per share. In fact, in the after hours, we're sitting right at $287. And this is a daily chart, and I will count 1, 2, 3, 4, 5, 6, 7, 8. There are like 8 candles in this range over the last year. So this stock has spent about a week, not even 2 weeks of trading days under this $300 price tag over the last year. That makes it an absolute critical level of support. Now, some technical analysis might say you've made a double top here and this stock is going to head lower. I tell you what, if you break through this $280 level or this 281, wherever you want to mark it out, well, 240 is absolutely stone cold in play on this one. In fact, I would actually bet on this. So that is the risk. If you step in here and buy the dip, from a technical perspective, this level should hold between 280 and 300. This level should hold. You should see some resistance on the way back up through $300 per share on this one. If you want to be on the safer side, I would actually wait for this one to walk up over $300 per share. You can wait till it walks up over 300, start your position there. You could set a stop loss down here at about $280 per share, because like I said, if you break this 280 level, there is almost no price action. There are no candles here, no demand for the shares between 240 and 280. Okay, now from a technical perspective, those things could materialize, but I do not like this stock under 280. If it goes under 280, I would wait till it gets down to 240, between 240 and 250. If we hold this level, I like this stock over $300 per share, because that is where it's hung out for the vast majority of a year, and we don't got a lot of resistance. You get some momentum on this stock, you get above 300, 320, 340, 360, all of that's back in play, and you still have plenty of upside. The upside is all the way back up to these highs, up over $460 per share. I like this stock a little bit from a technical perspective. I will certainly monitor this one. I like it from a fundamental perspective. I think this company's doing a fantastic job generating profits in a competitive environment. I like their service. I like what they're doing at Roku. What I absolutely hate is a $42 billion valuation on this one. It's just astronomically high. It doesn't make a lot of sense, especially when you compare that to an Apple, a Microsoft, a Google, an Amazon, all the major FANG stocks that we talk about. The valuation on this one's just doesn't make a lot of sense. And then when you match it up to the fact that their growth is likely going to slow next year, it could make some investors even more nervous about the stock. I would be gently tiptoeing in this one if that's what you want to do. That was Roku. Hopefully you guys enjoyed this video. I'll be back again soon with more. Good luck with your investments.